for gold and silver right now, it's the end game for gold and silver right now as I speak. And it's important to understand there's different phases we go through when we're looking at gold and silver in the stock market right now, and also the cryptocurrencies and everything that's happening right now. All I can say is when looking at these, when trading these markets, the number one thing that's really important to do is, there is characteristics to success in the markets. It has nothing to do with the actual chart reading, it has everything to do with you as a person. And right now, the number one characteristics to you doing really well in this environment is patience. What does that mean? Sometimes just sitting out and not doing anything. Because as you've seen from even things like gold, right? Look at gold. We've got big swings up, big swings down, big swings up. Look at this big down candle with this one candle wiping at the last few days through here. And I know there's people thinking that gold's gone to the moon again. Look at silver as well too. Silver, big swings down, big swings up, big swings down. Now, in my last few updates, I talked to you about how there's different phases in the markets, okay? And the different phases in the markets are this. There's what's called a price phase or an energy using phase. And gold has really given a really good chart around this to show you what's happening here. Now, here's the thing. Whenever we go through these different phases, there's what's called a price phase. This is based on WD Gann. I've learned a lot of stuff from WD Gann. Things like even people like Jesse Livermore and people like that. If you're interested in learning more about some of the Jesse Livermore mindset type of training, I've put together a book based off a lot of stuff he's done. And that first thing in the description, I'm actually giving it away for free. So if you've been trading the markets for a while, but you're in a situation where you're just not sure what's going on, you've been trying to trade different systems, then I promise you that book that I'm giving away for free, that's that first thing in the description. I promise you when you start to read that, it's going to start to open up some light bulb. Plus also I'm going to email you access to a free trading course I'm giving away. It's going to walk you through the biggest mistakes you're making right now, the biggest mistakes that most people make. I'm going to walk you through my trading system, the biggest crashes in history, and so on and so forth from there. So just make sure you go get access to that. Or if you really want to make sure 2026 is the best year ever, then fill out the application form. That's that third link in the description. And you and I personally have a good chat on the phone. And I'll see if I can actually help you out when it comes to me just coaching you. And I might actually have a coaching program to be able to help you out there. I do know I can help you out, but if the teacher's ready, the student appears. Now, back to what I was talking about here when it comes to the gold and the silver chart here in the mining sector, okay? One thing I've been talking about here for the last couple of months, for the last month, is that there's different phases in the markets that these markets go through, okay? There's these what's called price phases, and there's these time phases. Price phases is when the market's moving. That's called the energy using phases. Okay, so you can see the market moves up from here. We have nice moves, nice move up from there, very nice move up from there, and a very nice move up from there, right? So you have these what's called these price phases or the energy using phases. The energy using phase is simply what? They're buying it up, buying it up, buying it up, buying it up. And then eventually, guess what ends up happening? Then eventually you start to what? Eventually you start to get tired in the markets, right? Or you get tired. And because you've been using a lot of energy, you're going to go through what's called a resting phase, right? And so what ends up happening is then you start to go through what's called these resting phases, and they can go sideways, these sideways periods. But what happens realistically within these sideways periods? It's actually big volatility. It's up and down, right? Look at this here, down and up. Look at this here, down, up. See the swings through there? So what we're getting right now is we're in what's one are called these time phases or this energy building phase right now. And what that simply means is the big volatility is now increasing. It's not in those phases where it's now starting a new energy using phase, energy using phase, energy using phase. So that's the reason why right now it is the game over for gold and silver right now for the short term. Okay, for you guys that are short term traders, and for you guys that are FOMO in the market right now, I promise you're getting chewed up by this big time, because I started off this video with one of the characteristics to success in the markets is patience. And I have a thing called patience out and patience in. Now, patience in simply means when you're in a good trade, let the profit go. Big profits, small losses, right? Patience in the trade. Now, patience out, what that simply means is that your patience out, when you're out of the market and you're not in it for trading, right? This is for people that trade the markets. If you're not in the market, then the characteristic is be patient and not get involved. When the market starts to do this here, right? When the market starts to do this here, as you can see, volatile, 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 up and down, like we're getting right now, right? Up and down and up and now down. What's happening here? Big volatility. This is the time to stay out of the market. You're going to get chewed up because you're not in the right phase of what's going on. When you're in these energy building phases, it's sideways, it might go up, it might go down. There's not too quite sure. There's a lot of volatility through here. You can get chopped out. There's no real good directional movement out of that. But then after we've actually generated that, and then we start to break above the highs, typically when you start to break above the highs, typically that's when you get going again. So right now on the gold market from here, right, we're looking at the silver market as well too. We're out to what's called these energy using phases, and there's big volatility that comes with this, and you're going to get chewed up. And people that are now using leverage, futures trading, I promise you, do you think like, oh, silver's getting ready to go again, it's going to 100? Now you can see what I mean here, right? Because look at this here. This here was what? This here was the last energy what? Building phase, and then we had an energy using phase. What do you think's happening right now? This big volatility now is what? It's gone through one of those. See what I'm saying? This is the volatility time. This is when you want to stay out of the markets. And this is where my success in my trading really took off once I understand the different phases in the markets. When I know I'm in a phase like this here, I'm not even getting involved with it on a trading purposes, right? This is not long-term buy and hold. Okay, this is for people that trade. Trade the markets is you're active. You're getting in, you're getting out. So when I know I'm in those phases, that getting in and getting involved with it as a trade, you're going to get chewed up. Just like I promise you, just like I know a lot of you guys watching this right now are doing right now when it comes to your trading activities, especially if you're trading the markets, maybe even some shorter term options, right, on GLD or SLV, maybe even on the things like GDX. What's happening here right now? We're going through what? We're in that time phase. We're in that now what? Up and down and up. This is now volatile, right? Through here, energy building, energy using, energy building. And so right now it's game over for that through there. If we just have a quick look at the actual stock market, guys. Stock market's still in a very strong upward trend. I still see a lot more higher prices. There's the end game for me is a lot higher prices when it comes to the actual stock market. How that happens is either one, we just continue up from here, or two, we have a drop and then we continue up from here. Either way, X marks the spot for what I see happening in that's the Nasdaq. Dow Jones, the same situation. Do we hold here? Because if we do hold here, by the way, bit of FYI on the good old. There you go. Right. See how we have that high up there? See what's happening here on through here, right? If we do continue to hold this level, and then suddenly the Dow Jones then starts to hold here, and we start to reverse and continue up and then break out, guess what? Guess what's coming after that? Get ready for an absolute just moonshot from there, right? Very strong upward trend, nice, beautiful movement from there. And again, this is the same for the S&P 500 as well too. S&P 500, very nice upward trend from here, as you can see. Beautiful, beautiful, beautiful upward trend from there. Let's actually just bring on some trend lines, right? From there to there. And then we also have this whole resistance points all through there. You can see it's more like squeezing up into that sort of triangle pattern from there, as you can see. So what that simply means is what? Once we actually develop this pattern here, like we're seeing right now, and we could even have something going on through there somewhere, as you can see, right? From there to there, there to there. Guess what that means, guys? Guess what could be setting up from here? We could be getting ready for something like that to happen. So traders, what I'm going to do right now is I'm going to attach a video that I did. I actually recorded the video at the start of the year talking about where I actually see the S&P going. I'm going to talk to you about why I have a 7,500 target, how I got to the 7,500 target. And again, down the bottom here, when we're going through this tariff crash at the start of the year, I recorded the video and I put it out to my followers. And I want to replay that video again for you right now to show you what I was thinking. And the reason why I'm doing that is, one, show you that I called this bottom here and I called this big rally, but also secondly, why I see there's probably going to be a lot more upside to come. So enjoy that video, guys, and I'll see you real soon. So traders, check this out. I've been looking at this this Dow Jones chart. You can see this actually the Dow Jones chart. I can go all the way back to the 1950s and check this out here. We actually had a very big strong bull market through here, but look at this here. Oh, look at this. We're talking about like 2 decades of a bear market through here. Look at this, from 1960 to 1968. I've also been looking at the fear and greed index as well too. I've also been looking at the stock market itself from the Nasdaq and the E-mini perspective, and specifically I've been focusing on the S&P 500, and I've been doing some analysis looking at extensions, Fibonacci retracements, and so much more. And just by doing some simple analysis, we actually have a target up here of 7,500. We actually could be getting ready for a face ripper rally, and that's exactly what I want to share with you in today's video. So that's exactly what I want to share with you. So here's the big thing that I want to see with you here. One of the big things I'm noticing right now is what is the big thing that's happening right now across a lot of people, and it's I'm seeing a common theme around all these markets for me, right? And if you've been around the markets for a few years or more, then you would know what I'm talking about, right? The thing is this: we're starting to see the recession word, aren't we? Everyone's like recession, recession, recession. But what happens when most people are saying the same thing? The opposite happens in markets, right? We just know that. Because the exact same tonality, the exact same things, the exact same headlines, the exact same... There's always something to be fearful about, right? So I'm actually, firstly, I had a 7,000 target on the S&P 500 by the end of this year. I'm actually raising it to 7,500. Why? Because it's just extensions. I'm going to go with the extension number. But... check down here. Right down here was what? Right down here was when so many people were saying recession. So, and it's the exact same feeling and the exact same thing. I'm like, hang on a minute. There's a lot of bad news, so-called bad news. There's always a lot of bad news in the markets, right? There's always wars. There's always inflation. There's always Trump. There's always, tariffs. There's always something. But how come the market just keeps going up? But this time's different, right? And then the market makes a new high. That's like, hang on a minute, what's going on, right? And the purpose of me saying this, guys, is that please don't shut yourself off to what could be one of the greatest rallies we're going to see in a very long time. Because if this is going to be the final rally before we go into recession, and yes, we are headed into a recession, but the final blow-off move before the recession starts, we could be getting ready for that. And it's on the books here right now, and we're getting the exact same analysis here from a swing up, swing down, retracement, swing up, swing down, retracement, and so on and so forth. And the big thing I'm actually looking at this from, I'm always looking at this from a perspective of looking at the overall big market view, right? Because it's always... We always get sometimes trapped into this here. Right? A lot of people get trapped into, and I used to as well too, all they'll focus on is like, oh my goodness, John, look at this down move from here and so on and so forth, right? Oh, by the way, guys, bit of a quick short little tip for you guys, right? Lower highs are downward trends, right? What happens if we come down, make a higher low and then break up? That's now what? Establishing a new upward trend, right? Because lower highs are downward trend. If we rally up, come down, form a higher low, and then we start to break above here, if we start to get this scenario, guess what? The buyers are coming back in. There's a new trend, new upward trend being established. And if we get that, we're probably going to be breaking this downward phase through here. Let me do that again for you, right? This whole downward phase from here, we're probably going to hold, break up, break above this level 3. If we get something like that, guys, get ready for a face ripper rally. Now, again, yes, I do believe there's a recession coming. I do believe there's something big coming down the road. But in the mix of all that, remember, the market can do the exact opposite of what you think it can do. And one thing I've noticed time and time again is this. Check this out. Through here, we're getting the exact same situation from here. So I'm looking at the Dow Jones chart here, and I'm looking at the longer term picture here. I'm looking at all these. We had a big move up, and look at this here, very big move up. 19 there, big spike, big crash. Then look at this bull market, right? Look how big this bull market was, right? We're talking about we went into a very big bear market, right? Oh, by the way, guys, check this out. This is where I love this stuff, right? Look at this here. So whenever we're making higher lows, look at this here. Low, higher low, higher low, higher low, slight lower low, higher low. Whenever we make higher lows, we're in an upward trend. And look at this here. As soon as we started the switch, this is a monthly chart, by the way. Lower high, lower high. So this here is just, it's amazing. Anyway, so we can see, look at a very big secular bull market, but I'm focusing more on now on what I'm looking at here when it comes to these markets from here, right? So I'm focusing more on this here, right? Check out. Look at that. This from the bottom low from the 2008 financial crisis low point from there. We got this low point from here, bam, right there, bam, bam, and right there as well too. And right here, guess what? Right here is at. Right here is where what's happening right now. This is right now. Obviously, looking at the Dow Jones, looking at the big monthly charts, and we've probably got a whole bunch of support coming through here as well too. We're making significant lows, high lows, high lows, high lows. Yes, there's a recession coming. We know that, right? But is the recession going to be next year? Is it going to be 2 years from now? Don't rule out that this is just a short-term shake and bake and we're going to get ready for a face ripper rally and miss out on some amazing opportunities. So I don't want you to be like, nah, that's definitely not going to happen, John. You're an idiot and so on and so forth. No. Hey, don't shoot the messenger. I'm just sharing with you what I'm seeing right now, right? Because there could be so many amazing opportunities. Now, by the way, guys, there's so many opportunities on the bullish or bearish right now. Right? If the stock market does go up and gold continues to go up, and maybe the oil and energy sector goes down, whatever, right? There's amazing opportunities all over the place, right? If you don't know what you're actually looking for, then you need to know what you're looking for, right? First link in the description there, guys. I've actually got a presentation, a video that I've just recorded, sharing with you all the details to my trading system, my trading setup, so you can learn that. So if I'm going back to this level here now, and I'm going back to the S&P 500. Now check this out. This is where it gets so awesome, right? Using simple Fibonacci extensions, right? Fibonacci extensions here. Check this out. This is where it gets like, I'm telling you right now, guys, we could be getting ready for a face ripper rally to the upside. And oh my goodness, I am so excited. There's going to be so many amazing opportunities just underneath our feet. One, just stay flexible, right? Yes, this may not happen. We could go down. Who cares? We could get ready, but I believe we could be getting ready for a big face ripper rally, and let me show you the reason why. We've had a very big move from here to here, but check this out. This is how cool this is, right? We go Fibonacci retracement. If we go from low to high, look where we actually found support, right here. Look at this here. Absolutely amazing, right? Came down right to the 50% level, which was this low to high, bam, bam. And then look at that, we had a very big move. Now, where do we have what move do we have? There's the Fibonacci retracement. Now let's go to the extension, which is we break it from the low, we go from the high, bam, and then we actually bring this down now to the low point, and look where it actually got to. See this here? So I measured it from the low point, the high point, to low point, and you cannot believe this, right? This is just pretty magical. Oh my goodness, check this out, right? Where'd you go? From here, right? There. Look at this, right? Now we're going to bring this over to here. Let's check this out. So low to high, then we came down. That was 50% retracement. Look where it actually came to. It came right to what? Smack on 1-to-1. You cannot make that up, right? That is absolutely just beautiful. And again, I'm measuring from this low here to this low here. So as you can see from there. So what I did do is just recently, just to find out what's going on right now, is I did the exact same thing in the markets. And check this out. This is where it gets so cool. Right? This is from low to high. Look where we're at right now. Look, right at that 50% retracement level, right? Right at that level there, 50% retracement and a long-term trend line coming up. So if the exact same thing happens, which we can, right, in this very big bull market, now remember, if I bring this over here, remember, this from low to high, that was the 50% retracement. The 1-to-1 extension was up there, right? Remember that? Now we got what? Low to high, come down, 50% retracement. This here is the exact same thing over here. Now, by the way, the herd mentality is doing the exact same thing here too. Recession, crash, oh my goodness. We also have the fear and greed index. Oh my goodness, so much fear. Get ready for a slingshot, right? Face ripper rally, here we go, right? So now check this out. This is where it gets so awesome. So I'm doing that through here, and how I got this 70, I've actually got a 7,000 target. I was being conservative. I actually should raise it to 7,500 now. Why? Using simple extensions is that if we continue this overall big bull market, because we are still in a very big bull market from here, right? If we go to the extensions, and we go from low to high, and then we actually bring this extension to the downside, which as you can see, what I'm doing is I'm just measuring. I'm measuring this bit through here, as you can see, right? So that's that low bit from there. Let me just make sure it's on there. Right? And then if I squeeze this up, look where it actually gets down to. This whole one-to-one extension, this O&D target that I have here, it's just a short abbreviation for what I'm looking at here, the O&D target. It's like this is what we could be getting ready for, guys, right? And so anything can happen. So just keep an eye out for this here, guys. This here tells me, and I'm just looking at this overall market. I'm looking at the sentiment right now. So much fear, and crashes don't happen when most people are fearful. When everyone's saying that there's a recession coming, and oh my goodness, this is so bad, and people are worried, the market tends to rally. The market tends to rally,